a text alert service, and we're going to talk about Heiken-Ashi candles a little bit today. And I'm going to take a look at a couple of the intraday strategies that we use in detail in the room. So again, my name is Dave, and for the SPY Super System software, and we will get started here. First thing I got to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, we'll get started. If you have any questions, by the way, you can. I'm sure you can put them into the question box here, or if you put them in the question box or the chat box here, Rory will give you a call back. You can put your name and phone number, or your Teams username. Skype doesn't exist anymore, but your Teams username, and Rory from Right Line will give you a call if I can't answer the questions. Most of the time I can, but if it's something about subscriptions or things like that, he would have to handle that. And there's his number in case you want to call him, and I'll display this again at the end of the presentation. Okay. First thing I want to talk about, the room that I have called the SPY Super System Trading Room. It's an options trading room. We typically trade almost all options. I do some stocks occasionally, but mostly options. And I'm in the room every day from market open to market close. Today I had to leave a little bit early because of the webinar, but usually I'm there from about 9:15 till about 4:15, all day long, answering questions, showing charts, and recommending trades, etc. We had a couple of really nice intraday trades today. I'll show you a couple of those when we get to the end of this. But this is inside the room in the alert service. These are the strategies that we typically use. These are our swing strategies. These will be strategies that typically, most of these are going to be overnight, out to about 3 weeks. We do straight calls and straight puts. That's the most common, obviously, option strategies. I do straddles and strangles. These are non-directional trades. This is a trade where you take a call and a put on the same stock. You don't care which way the stock goes, but you want it to move a lot. And that's just what the straddle and strangles will do. We use debit spreads using weekly options expirations. This is a way to cut down on your risk by the amount of the cost of the trade becomes less using debit spreads. And we use weekly options expiration to maximize our return on investment on those. Time spreads, this is a strategy we use over earnings. This is a non-directional trade where we capture what's called volatility crush. If you're not familiar with how volatility works with earnings, the market makers jack up the prices, the option prices on the puts and calls just before earnings, and then after earnings come out, they take that volatility out of there. They do this to protect themselves because they don't know which way the stock's going to move, and they certainly don't have any idea how far it's going to move. So they make it expensive to try to buy those directional options. So we take a non-directional approach to that. We also do what's called a weekly ATM strategy. This is a strategy where we take a neutral to bullish stock and we sell weekly puts on it. We sell puts on it every week, so it has to have weekly options, and then we hold a longer dated put at a lower strike price to protect ourselves and reduce our margin costs. A very effective strategy, and also a strategy that's very forgiving. You can, even if it goes against you, you can make money with this kind of strategy. And then we do typically credit spreads to capture premium over a few weeks. All right. Now these are two systems that we use inside the room for intraday strategies. These are intraday strategies. We call the SPY Super System intraday strategies. The first one is what's called the SPY Super System, and this is for very high probability trades. We try to catch the moves in the SPY, the Qs, the IWM, futures, and even stocks. This applies to just about everything. It was initially set up to take advantage of moves in the SPY, the Q, the IWM, but a lot of people use it on futures, and you can even use it on stocks. I use it on stocks as well. Now, a new strategy I've added is called the OOMCAT, kind of a funny name. OOMCAT, this is for high momentum, high volume trades. That OOMCAT stands for out of the money catalyst. There is a catalyst that's driving the stock in one direction or the other, and we use out of the money puts and calls. And I want to emphasize, and I'm going to talk about this a little bit, you should never be taking out of the money puts and calls unless you have very specific setups. You should never be taking them for any swing trades. And for intraday trades, well, they're only going to be used on a specific criteria that I'll go into a little bit, and I'll show you some actual charts of how some of these things can work. We had 2 of them today that which were really, really nice. Again, OOMCAT for high momentum. So these are inside the room. These are stocks. These are trades I can't alert on, and I can't really even post them in the room, but we call them out in the room, and you can learn them because I have videos on both of these strategies and how to use them with the specific criteria for entering and exiting. All right. Now, why am I adding this OOMCAT strategy? By the way, this intraday trading strategy. Well, there's something kind of amazing coming up here sometime this year, and that is there's a thing called the PDT rule. This is called pattern day trader. A pattern day trader is a trader who has less than $25,000 in his trading account, or he doesn't have a cash account. But for most people, if you have less than 25,000, you can only trade intraday trades 3 times in a 5-day period. You can only have 3 intraday trades that close out in the same day. After that, you come under the PDT rules, pattern day trader. You can't do that unless you've got $25,000 or more in your account, right? What's happening here in 2026 is they've already approved the change. They're going to take this $25,000 minimum for a PDT rule down to about $2,000 to $2,500 sometimes this year. And what this is going to do is it's going to introduce millions of new intraday traders to the market who didn't have access to it before as an intraday basis unless they were doing futures. But for trading stocks, this all of a sudden is going to give millions more traders access to intraday trading. And again, this shift is going to demand more fast, disciplined, momentum-based strategies. So we're adding the OOMCAT strategy now to prepare traders for far more accessible, far more active market environments. And for me, it's really important, especially for the folks in our room, because as a intraday trader, as a retail trader, we take our money from other retail traders. We don't take money from the institutions. You're not going to beat the institutions, but we take them from other retail traders. What does this do? Well, this brings millions of more retail traders into the trading arena for us to basically to be harsh, to take advantage of, to take money from. They don't know what we know. They don't have the SPY super system. They don't understand OOMCAT rules or any of the trades that we do here using high volume candles, etc. So I'm going to show you that. But this is one of the reasons that I put this out there. Wanted to get people trained to it. I've been doing it. I started it November 17th, and I'll show you the results we've had with it. Okay. All right. This was what the alert service looks like. It used to be called the Compass Alert Service. It's the SPY Super System Alert now, but I just left the Compass name up there. These are text alerts that I send out to folks who are on the alert service. These typically are going to be swing trades when you get them. They normally aren't going to end in one day. They can, but the good news is for somebody who's a pattern day trader, any trade that comes through in the alert service can be held overnight. They're all structured on the daily chart. They mean for you to be able to take them overnight. So any kind of an alert you get, you don't have to get out. In other words, if you don't have the ability to get out because you're under a pattern day trader rule, you just hold it overnight. And a lot of times you'll make more money than we do if we exit that day. All right. So again, it comes through on your phone. It takes about 5 to 10 seconds to get the alert after I send it out. And we don't do a lot of these. It's not like you're going to be swamped with these things. There's not a lot. All right. Now, I want to talk just briefly here about what drives the market. It's really important to understand when you look at a market. If you watch today's trading, it was a huge drawdown this morning in the market, and then a bounce up, and then a lot of compression, and then the market closed relatively strong toward the end of the day. SPY ended up down about 0.6%, but it was down almost 1.5 today at 1.5%. So very, very volatile day. We need to know what's causing these trends, what's causing this momentum in the market. It's really important to understand that. So the market's made up of 2 different groups. I think everybody knows this. Retail traders with the little marbles down here. So as retail traders, it's important to understand that we cannot move the market. We as retail traders don't create trends. We don't stop trends. We can't create reversals. We can't do any of that, right? We're just in there trading. And if the institutions aren't in any kind of force, If you're trading in with just other retail traders, you're going to get chopped up. It's chaos and it's chopped when just retail traders are trading. No direction. Now, the institutions are in the market all the time, but they aren't necessarily all trading in the same direction. What we're trying to measure here with the institutions is there a lot of institutions pushing, for example, an NVIDIA or Microsoft or the SPY? Is there a lot of institutions buying it or selling it at the same time? That's what we're trying to identify. We need to identify that there's not just the institutions in there, but they're in there with force and creating a trend, right? Now, the institutions are if you're not aware of what makes up institutions, investment banks, Goldman Sachs, Bank of America, Morgan Stanley. These are all your investment banks. That's one leg of the institutions. I say there's actually four main groups. You have the investment banks, you have the pension funds for police pension funds, firemen pension funds, state worker pension funds. Those are fairly big organizations with billions of dollars to invest. Same as the institutions do, with being the investment banks. The third thing would be hedge funds. There's hundreds and hundreds of hedge funds that have billions of dollars to push the market. And lastly, there are mutual funds, T. Rowe Price, Vanguard, big, huge funds with more billions and millions of dollars. So this is what's making up institutions. And our job is to identify when they're coming into trades and taking a trade and when they're not, we need to stay away from it. So that's what the SPY super system tries to identify. And there's the bell, market just closed. Okay, now I'm gonna go off subject here just for a bit. There's a reason for this. This is a blackjack table right here. Ace and Jack of Spades, a couple of $100 chips, nice blackjack. What the heck has this got to do with trading? Well, if you ever talk to anybody that your friends or your relatives about trading, a lot of times what they're going to say is it's gambling, it's fixed, you can't beat it, right? And that's why I wanted to bring this up. Is trading stocks and options gambling? Well, it can be. I mean, it can be. Just like playing blackjack can be gambling. But when I was much younger, much younger, I made my living playing blackjack in casinos as a card counter, right? And if you know what card counting is, if you don't know what card counting is, I'm not actually counting the cards. I'm tracking the composition of the remaining cards in the deck. So just for ease of understanding this, when what's left of the cards in the deck has many more big cards than little cards than it normally would, then the advantage swings to the player pretty heavily. When there's a lot more little cards in the deck than there are big cards compared to what a normal deck would be, then the advantage goes more to the house. The house gets a bigger advantage, right? So as the deuce through sevens are removed from the deck, the advantage swings to the player. As the 10, Jack, Queen, King, Ace is removed from the deck, it swings to the house and at a bigger level. So what we do is we track to see what the remaining deck looks like. If the deck is in our favor, in other words, there's a lot more big cards than normally would be there, then we're going to bet bigger and we're going to take more hands. If it's against us, we're just going to bet the minimum and just take one hand. So the reason I bring this up is because trading stocks and options is very similar in that without knowing what the institutions are doing, the trader doesn't have any edge. So in essence, they're gambling. So yes, trading can be gambling, just like playing blackjack can be gambling. But if you've got a methodology and a strategy, then you can become consistently profitable, either playing blackjack, in this particular case, trading stocks and options. All right, but I will point this out, and this is really important. Both trading and when I was playing blackjack, both required discipline and emotional control. Losing patience and losing your emotional control when you're trading is basically tantamount to giving away your money. And this is really important because discipline in trading means that I should only be taking trades when all the criteria are set up to be high probability. I shouldn't be jumping around from trade to trade. A lot of traders watch social media and they see these, buy GME or buy Netflix because it's moving up, and they get distracted and they start looking for the grass is always greener. They're looking for other trades. You can't do that. You need to require discipline. They need to stick with this methodology and strategies that work. Very important. And then emotional control. And what's emotional control? Well, obviously, trading out of fear and trading out of greed are two bad emotions. All right, so if you're in a trade and it goes against you and your P&L is red, you're all of a sudden getting to the point, if you're watching that, you're trading out of fear, right? And so you're not going to trade well. Or you're trading out of greed. If it's going up, many times you won't take profits when you should because you're greedy, and that's an emotion. There's also emotions would be like fear of missing out, which is also part of greed as well. So emotional control is very important. And again, that would be anger, revenge trading, or even being so excited about winning that you don't think you can lose anymore. You just start taking trades because you've had 5 or 6 winners in a row. That's emotion. That's trading with emotion. So those things need to be controlled. Otherwise, everything else you do is not going to work. All right, so I consider the SPY super system as my card counting system, referring back to blackjack. It gives us an edge over the other traders, allowing us the ability to become consistently profitable traders, right? And taking the SPY super system in conjunction with identifying the best high probability trades can lead to consistent profits. Because it's important to understand, at any point in time, the institutions can be driving 5, 6, 7, 10 stocks. And what our job is not just to know that, because we need to know that, and then find the best one of that group, find the best of the whatever stocks qualify. Okay. All right. Now in the room we have in the alert service a couple of rules to trade by. We trade the best and skip the rest. So we're only looking for high probability trade setups. We're not going to take a lot of trades. And skipping the best is kind of an overlooked thing. If you can bypass a trade that would have been a loser for you, that's just as good as a winner. And sometimes that requires you to sit and not take trades for a while. But think about that. If you're not taking trades for a while, then you're saving money if they would have been losers. And in this market right now, we run into that a lot. I haven't been sending out a lot of alerts, and people say, you know, why aren't we getting any alerts? Because if I can't just take a trade and send it out an alert just to send it out an alert. I'm putting you at risk. I'm putting money at risk. You don't have a high enough probability to succeed. So, you know, maybe you're not taking trades, but you're keeping your money in your pocket. All right. And then the second thing is, and this is important to remember, our objective, and your objective, I'm sure, it's not to make trades. Your objective is to make money. We're not in trading to try to prove how good we are, or try to beat somebody else, or try to show that we never take any losses. That's just trading to trade. All right. You know, a lot of people who think that they're a trader feel like they need to be in a trade all the time, or they feel like they're not working. You know, I'm being lazy. I haven't got a trade on. No, that's not what you want. Your objective is not to make trades. Our objective is to make money, and we do that by taking only the very best trades. Okay, maintaining discipline. We talked about that. Learn and follow the process. I have a very simple process to find high probability trades. You learn that and you follow it. It's very easy to do that. And then remain patient. And this is probably the hardest thing for retail traders to do. Remain patient. They get bored. They're staring at the screen for a while. They got to find something. They'll start justifying taking trades that aren't really good trades. It just eats away at your balance in your account. All right, so as a profitable trader, we need an edge over other retail traders. Biggest one we've got is the SPY Super System software. Knowing when the institutions are in and when they're not gives us a massive amount of edge over other retail traders who don't know this. We trade relative strength and relative weakness, and people always seem to think I'm talking about RSI when I'm talking about relative strength. I'm not. I'm talking about how is your stock moving in relationship to what the SPY is doing. What's the SPY doing? SPY's moving sideways, or SPY's moving down, and you've got a stock that's stacking green candles going up. It's got relative strength to the market, and vice versa on relative weakness. And this is really important. A lot of retail traders don't understand that by taking a stock with relative strength, you're increasing your probability of success by a lot. All right? We trade with the market trend if there is one. This morning we traded the market to short, and this afternoon it bounced back up again. Trade the market long. Buy near support and sell near resistance, a very critical one. Very critical, because if you can get in near support or resistance when you take a trade, then you're not going to have a very big loss, because if it goes against you, your breakdown level is going to be fairly close to where you get in, so your loss is going to be minimized. Okay, those are the 4 things. If you can do these 4 things, you're going to be ahead of about 95% of the retail traders in the world. All right, and this is the COMPAS system, which is now called the SPY Super System. We're going to talk about this. What does it do? It identifies the highest probability trade setups by and then bypassing the ones that aren't good. So it's looking for the most high probability trade setups based upon when the institutions are in the trade and when they're not. It does not analyze some fairly complex trading data, but it presents the information in a really easily identifiable visual format so that even fairly new traders can identify whether institutions are in a trade or they're not. And it'll tell you whether it's a decent trade. And I'm going to go to some live charts today so you can actually see that. All right, and again, how do we get an edge over retail traders? I'm going to keep hammering on this. Only take trades that are being driven by institutions. Trade stocks that have relative strength or relative weakness versus the SPY or the Qs. Trade in the direction of the overall market trend. And it gives us an edge because our trades will be supported by institutional buying and selling. We're riding the coattails of the institutions when we trade like this. Okay, stocks will be outperforming the index in stocks that are moving in the direction of the overall market. That's how we're going to be trading them. Okay, all right, so let's move ahead here. This is my logo for the SPY Super System. I've got the SPY Super System is what we mentioned earlier. This is intraday trades for SPYs, Qs, IWM, futures, and even stocks. What I did was I separated out, since this was actually for the indexes, SPY, the Qs, the IWM, and futures. I've got another one, but it's the same system. It's called Institutional Momentum Stock System. This is for using high probability trades with in the money calls on stocks, stock options, all right, like Microsoft, Tesla, Meta, Reddit, any of those stocks. But it's different than a little bit different than the SPY Super System, which is actually for the indexes. Okay, but they both work the same way. You would be always be taking on both of these in the money calls, in the money puts. Okay, now the SPY Super System is used to trade the SPY, the Qs, and the IWM, as well as futures. The Institutional Momentum Stock System, the one I just showed you here, and this is used to trade individual stocks, similar to the SPY Super System strategy, but it also uses relative strength and relative weakness as one of the criteria, which you really can't do with the indexes. You can say, well, the SPY is stronger than the Qs, but that's about the only comparison you can get. This would be looking at what's the SPY doing and what's your stock that you've got doing. Is it outperforming the SPY? All right, so and these are intraday trades. These are for intraday trades that you're going to get in and out the same day, probably within 3 or 4 candles. Okay, now on the SPY Super System, we've got some color-coded, so it's easy to identify this, all right? You've got green is bullish strong, blue is bullish trend, red bearish strong, yellow bearish trend. All right, so it makes it very easy to see. And this is a graphic of the SPY Super System. I run this on Thinkorswim. You can also run it on Ninja, but I run it on Thinkorswim in my room. This is what I display every day. And I'm going to show you some of those live charts in a bit. But this is what it looks like. All right, this is the SPY Super System running on Thinkorswim. Now, I don't trade on Thinkorswim. Just because you're running the software on Thinkorswim, it doesn't mean you have to trade on Thinkorswim. I trade on Tradier, but you can trade on any platform that you want. You can trade on Robinhood, you can trade on Interactive Brokers, you can trade on Tastyworks, you can trade on Fidelity, you can trade Scottrade, you can trade anywhere you want, but the information is going to be displayed on on Thinkorswim in this particular case. And what we've got here is these are our indicators down here, right? This is actually this is the Laguerre modified indicator. This is just measuring momentum, okay, on whatever we're looking at. This is the SPY, for example, on a 5-minute chart. Okay, we're looking at this this is momentum indicator. This current time frame momentum is going to mimic exactly what this indicator is telling us. And this is important because this modified Laguerre here, it's not just a straight oscillator, but it also has divergence stripped out of there. This is pure momentum. That's all we're seeing right here. This is current time frame momentum. Okay, green and blue is bullish, red and yellow is bearish. So this would be reflecting in this particular case what the current time frame is, which is 5 minutes. what the institutions are doing on this index, or on this buy, or whatever stock we were looking at, what's going on the current 5-minute basis, or if it was a daily chart, what's going on the current daily basis. And for intraday swing trades, this is all you need to use. Use this and what these other things up here I'm going to talk about. Current time frame momentum. For swing trades, the current time frame momentum and the multi-time frame momentum, this is multi-time frame momentum, they need to be aligned. They both need to be bullish or bearish. Again, green and blue is bullish, red and yellow is bearish. This is a long-term trend. If you're in a swing trade, it helps if this is also aligned, right? Now, on a 5-minute basis, this is what you're using, the current time frame momentum. Up here are the critical support resistance levels that we use. This first one here is called the VWAP, the volume weighted average price. If you don't have that on your 5-minute chart, you really need to put it on there. This is a major level that the institutions use, volume weighted average price, right? This is where they get in and get out, right around the VWAP. Now we have 2 other moving averages on here. The green line, which is actually changes color based on the trend. That's the 15 EMA, I've got it identified here. The 15 exponential moving average. And the white line is the 8 exponential moving average. You can enter trades for for intraday trades on any of these lines. As it goes through the VWAP, it goes through the 8, or it goes through the 15. All of these are support resistance levels for entering a trade, right here. Okay, so that's what we use them for. This little number thing up here called market internals, this is telling me not what's the SPY doing. This is telling me what is the actual overall market internals looking like, which is all 6,000 New York Stock Exchange stocks. Are they bullish or bearish at the moment? So you can see what the overall market trend is based on the entire market, right? This will tell you what the SPY is doing. This will tell you what the rest of the market's doing. And there's one other thing in here that's really important. You see these candlesticks here, white candlesticks. When you see white candlesticks, these are bullish candlesticks, but they have high volume. They have very high volume. And yellow ones are bearish candlesticks with high volume. So anything that's either white or yellow is a high volume candlestick. And why is this critical? Because when a stock breaks through resistance, for example, here, okay, you notice how it went from yellow to blue, back to yellow, back to blue. It's starting to chop around, but notice that the volume is huge in this stuff, all right? The oscillator is kind of moving sideways and moving up. But you can take a trade like this as it breaks through the VWAP and you've got high volume. You can take it right there, ride it up for 3 candles and get out on an intraday trade. That's a beautiful intraday trade just based off of this high volume candles. High volume candles are momentum that tells you that not only are the institutions coming in here, but they're coming in with some force, right? And yellow are bearish ones. Right, so we'll see these quite a bit as we move ahead here. All right, now before we get into details, I'm going to go ahead and go through the Heiken-Ashi presentation. This is not going to take too long, but I've had a lot of people ask about this, so I'm just going to run through this. And if you have any questions on Heiken-Ashi as we move forward, please ask me. All right, so Heiken-Ashi candles. All right, so this is a chart, British pound, Japanese yen. Doesn't make any difference. Candlesticks are candlesticks. This can be Tesla, this could be gold, this could be orange juice, this could be anything. But what you want to understand, what you want to remember with Heiken-Ashi candles is flat top candles are bearish Heiken-Ashi candles. These candles are made up of 2 candles, so you're getting, notice a flat top, bearish Heiken-Ashi candles with flat tops. Bullish Heiken-Ashi candles have flat bottoms. See the flat bottoms, okay? And you get some with wicks and tails, but those are not true Heiken-Ashi candles. Heiken-Ashi candles have flat tops for bearish, flat bottoms for bullish. The wicks and the tails on a Heiken-Ashi bearish candle like this does not mean that it's not that bearish. It's if you've looked at regular candlesticks, you know that if you have a standard candlestick that's a bullish candlestick, a green candle, but it has a wick on the top, that tends to make it less bullish, because what happened is the buyers sent the stock up, and then the sellers come in and drove it back down. That is not the case with Heiken-Ashi candles. Heiken-Ashi candles, a big tail on a Heiken-Ashi bearish candle actually is more bearish, right? So you can see, here's your flat top, flat top, flat top. Now notice, each candle starts midway down the previous candle because it's made up of two candles. Always starts midway down the previous candle, right? So this is a bearish Heiken-Ashi trend here. You can see that how nice this is. Now, one of the ways that you use Heiken-Ashi candles effectively is, let's say this stock was actually long for the day, but it was pulling back to support. What you're looking for is to find what's called a Heiken-Ashi reversal. You're looking for a stock price that comes down and reverses and heads back up into the direction you want it to go, which is bullish. Because let's say this was bullish for the day. So here's your downtrend. So where are we going to find a Heiken-Ashi reversal? Well, we're looking for flat tops, followed by mixed candles, followed by flat bottom. So here's a flat bottomed Heiken-Ashi candle. Now, technically, this is a Heiken-Ashi reversal candle to the bullish side right here. But I always add this caveat. When you're changing, when you have a trend that's fairly strong and you're trying to revert back into the original trend, if your candlestick is reverting back into the original trend is much smaller than the ones that created the trend, that's not a good reversal signal. You need to have a big candle on a big down move like this. So I wouldn't take this, right? Even though it's a Heiken-Ashi reversal, I wouldn't take it. It's flat bottom, flat bottom. Now you would have made some money on it. You can see it popped up a little bit. But what I'm really waiting for is a big Heiken-Ashi reversal. So this moves up to get wicks and tails, wicks and tails. Here's another bearish Heiken-Ashi candle here. Another one. Here is your Heiken-Ashi reversal candle to the upside. This is your bullish Heiken-Ashi reversal candle that you can trade. Big volume. See the size of it? Very big, right? So you can trade this. And this is what you would want to trade. Something like, whoops, something like, boop, 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 something like that. Where this stock comes down and moves up. Now, one of the things to keep in mind about a candle like this, I get this question all the time. Do I have to wait for this candle to close to take the trade? And the answer with Heiken-Ashis is no, you don't. If you're about halfway through the period, like if this was a 5-minute candle, if you're 2 minutes, 3 minutes into that 5-minute candle, you can assume it's going to be a flat bottom. If this was a daily candle and it's after 1 o'clock in the afternoon, you can assume this is going to be a flat bottom. So you don't have to wait for the candle to close for a Heiken-Ashi candle. Now, for regular candles, you do need to confirm a reversal. So this is your reversal right here. Okay. So this is where you would get in. Now see what you get. Flat bottom, flat bottom, flat bottom, flat bottom. Couple of wicks and tails, flat bottom, all the way up. A beautiful trend. A very nice trade here. And this is where you would get out. Here you're getting some wicks and tails, and you're getting some red on the candlesticks. Take a little sip of water here. Okay, so that's what you're looking for. All right, bearish trend, bullish trend. You want to catch the reversal in it. Key thing to remember: bearish candle, Heiken-Ashi candles have flat tops. Bullish Heiken-Ashi candles have flat bottoms. All right. And the wicks and tails don't hinder the strength of that particular trend. In other words, these wicks on these Heiken-Ashi candles to the bullish side are actually make the candlestick more bullish than less bullish, right? So that's a fairly big difference. Okay, so we just go over that again, right? So this is the same kind of chart. Now let's say that this blue line that's right in here, I don't know what it is, but let's just say this was your VWAP on a 5-minute chart. And you wanted to take this straight trade long because you're waiting for it to reverse. It was bullish on the day, it goes back. So here's a Heiken-Ashi reversal candle, but notice it's below the VWAP and it's too short, too small. Then it moves sideways. This is where your breakout occurs. You see the Heiken-Ashi reversal candle right here, right through that blue line. Let's say that's your VWAP. Then you get flat bottom, flat bottom, flat bottom. Here you got a wick and a tail, but you're still above your VWAP. You would stay in, and then you would ride this thing all the way up. And here's where you would be getting out. Wick and a tail, red candle, you're out of the trade. But that is your Heiken-Ashi reversal way to trade it, right? And basically that's looking at, if this was the VWAP, it could be the 15 EMA with any of those lines. But that's what you're waiting for, is it to break above there, because that is your resistance level that you're trying to get out of. All right. All right, and so here is your distinctions of a Heiken-Ashi candle. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. Bullish Heiken-Ashi reversals are identified by a flat top Heiken-Ashi candle followed by flat bottomed Heiken-Ashi candles. Remember, the size matters on these things. The size of the candle when you do a reversal, you want it to be as big, at least pretty much as big as the ones that created the trend. All right, and that's really important. And you're not going to go directly necessarily from a flat top candle to a flat bottom candle. There can be doji candles in between. So these are your reversals. A bullish Heiken-Ashi reversal identified by flat top candles, followed by flat bottoms, and vice versa on your bearish reversals. Okay. So again, this is the recap. These are the advantages of Heiken-Ashi candlesticks. And you can put them on your chart. All you have to do is change it from candlestick to Heiken-Ashi. All the charts allow you to do that. It smooths out the price action, reducing the noise, makes identifying trends much easier, improves identifying confirmation of trends or trend reversals, especially trend reversals, which is what I use it for the most. And it does help identify potential exits when the candle bodies shrink or the reversals occur. But from my standpoint, when I'm getting ready to exit a trade, if I've got profits in it, I'm probably going to switch over to regular candles so I can catch the reversal more quickly. All right. Now, I'm going to show a couple of charts, then I'm going to go to some live charts just to show some Heiken-Ashi candlesticks. This is my TC2000 platform that I use for my charting, and I just do some scanning on here, but it doesn't really make any difference. I just want to point out something about Heiken-Ashi candles here. Now, look at 8-1 here, May 1st. This is what you want to look for. Right? You see the chart the trend coming down and then bouncing and then heading. Right? So this is Uber. So this is kind of tough. You get gap. What do I do with something like this? But let's switch this over to a Heiken-Ashi candle setup. All right, here's the Heiken-Ashi candle setup on it. Here's the May 1st, right? Here's May 1st here. Here's May 1st here. You see the Heiken-Ashi bearish candles, and here's your bullish candle right here. This is where you would take the trade. You would take the trade during the day on May 1st on this Heiken-Ashi reversal candle. That's where you would take it. And then you would get another Heiken-Ashi candle the next day, another one. Still getting flat bottoms here, and now this is where you get out. Starts to flatten out right here. So this is your trade. Now notice something. Gaps. See the gaps? No gaps. You don't see any gaps in Heiken-Ashi candles. Gaps are filled because it's using two candlesticks. All right, but so that's where you would have get in. So if you look at where you're going to get in on May 1st, this is where you would have taken the trade. This is where you would get out of the trade. That's a big, huge move in Uber. All right, so that's just kind of a prime example of that. All right, so I'm going to look at some live charts here. I'm going to switch over to my SPY Super System right here, and I'm going to look at some daily charts here because Heiken-Ashi it's a lot easier to show you on a daily chart. I mean, you would see one here too. If I switch the style on this to Heiken-Ashi candles, we can find Heiken-Ashi candles here. If we go back and look, we're going to find, and here's a Heiken-Ashi reversal candle right here, right? Notice it went from it's bullish, it's Heiken-Ashi candle, it's riding up through this white line, and then you get big volume candles. That's a nice Heiken-Ashi reversal right there. But typically, it's much higher. You use these a lot for swing trades. I use them a lot on the daily chart, and it's a lot easier to see because there's going to be quite a few Heiken-Ashi reversals back and forth during the day. Here's a Heiken-Ashi bearish reversal back to a Heiken-Ashi bullish reversal. All right, so let me switch over to a daily chart here. Again, this is the SPY Super System right here. I got THC up here, which is the Tenet Healthcare, which I just took some calls on this today. Over here, by the way, you get some scans that come with the SPY Super System software. This is cascading up. This is identifying relative strength stocks, relative weakness stocks, and this is on 5-minute, or I can switch it to daily. So if I wanted to look at a cascading up stocks on a daily basis, I would just go over to my cascading up daily, and this way I'm going to get some stocks, and then I can just click on them on the daily chart, and it's going to show me the chart right here with Heiken-Ashi candles, or I can use regular candles on. So you can see the big, nice Heiken-Ashi reversal candles on these particular stocks. And so you can do the same thing with cascading down. And then this leaves that list down here. We have the one wise bear and the one wise bull. These would be just scanning for swing trades. This would be used for daily would be for swing trades. And if I use the 5-minute scan, which was the one that was up there originally, cascading up, that's what I look for strong stocks during the day on a 5-minute basis. So if I switch to a 5-minute basis here, and I just click on these, it's going to show me what's happening last 5 minutes. And it's going to show you some nice bounces up. See that? So this is how we catch some of our intraday trades, right? Off of these particular scans right here. All right, I'm going to kind of move this out of the way for a second so we can take a look at some stocks. Now I'm going to go to a daily chart, and I've got this set on Heiken-Ashi candles. All right, set at Heiken-Ashi because that's what we're going to look like. That's what we're going to look at. So a couple of things. I wanted to look at a stock now. Look at Sharp. There's a couple of things to understand here. So here's Sharp, right? So this is a daily, and this has a Heiken-Ashi reversal candle. If I look at this, right, you can see the flat bottom, but it's not very impressive compared to the big Heiken-Ashi candles back here, right? It's a little bit, they're a little bit smaller. So I don't think I would jump into this. And if you were going to swing trade this, remember what I said about the SPY super system. You need to have the current time frame momentum and the multi-time frame momentum aligned. They are not aligned. This is bearish, this is bullish, so you wouldn't be taking Shopify here, right? Even though it's showing up as a Heiken-Ashi reversal candle. As a CVS, same situation with CVS. Not a lot of good Heiken-Ashi reversals bullish today because the market was so weak. But here's CVS with the Heiken-Ashi reversal, but again, current time, multi-time frame is still red on CVS. Now let's take a look at CRM. CRM, now it's also red here, right? But momentum's coming up, but it's red right here. This came off of earnings last night on CRM. Earnings was pretty good. It's bouncing up. It's actually a decent setup. Technically, this is actually a pretty good setup. If this switches over to blue tomorrow, I think this would be a very good long on CRM. And there's Marriott right here. Again, can't take it. See, we've got current time frame is red, multi-time frame is green. So it's very important when you're looking at candlestick structure to make sure you're looking at your SPY super system to identify whether you've got the criteria that you need. So there's nothing there that I can find that looks pretty good for a trade. If I look at Tenet Healthcare, what I've got here is I've got Heiken-Ashi continuation. See the Heiken-Ashi bullish move here, right? And then it's moving up and compressing. Now it's breaking out again. This is a good setup for a long here, which is why I took this today. Notice everything's green. We got Heiken-Ashi reversals right here actually, and this is a continuation with a high volume candle. So that's why I took THC. See, very, very important on some of those things. And we'll just look at a couple of other randomly. There's Tesla. What's it look like? Looks like it's untradable. Basically, it's very bearish, but there's nothing here to tell you that it's likely to keep going down. Okay. Short. This is one I traded today. I traded this on a 5-minute chart. Is BABA, but here's BABA right here. And again, we look at BABA short across the board, right? The institutions are selling. Here's a Heiken-Ashi. This is what's called a Heiken-Ashi continuation because it was already bearish. It's coming down and then it compressed. And then we get a Heiken-Ashi reversal here with a high volume candle, which would have been a great place to take it, except we went a blue here. But now we're back to red again. So anywhere in here. But this is a Heiken-Ashi continuation. You get a flat bottom, a flat top, I mean, after a couple of wicks and tails that you can take. So BABA short is really a nice setup. This is actually one I took today, which I'm going to show you in just a little bit when I look at the OOMCAT trades. Right, so that's what Heiken-Ashi candles look like. That's how you find them. I mean, I have a scan for these things in TC2000, but when you find them, you want to take a look at your SPY super system and find out, is the stock set up to be taken long or short, right? That's really important. And again, you can do these on 5-minute, as I said. They work fine on 5 minutes. This was a trade I took in BABA today, this morning, right here. And you see what you see here. You see the move down in this particular. I think I took it about 9, right about here, as it broke below the VWAP on the 5-minute chart. with high volume. High volume. This is what OOMCAT is used. High volume candlestick, breaking down. Everything's red. Institutions are selling it. I took it here and I wrote this thing down. And I get in for $91 a contract and out of the money, and I get out for $1.45 just a few minutes later, like 4 or 5 later. And I had people in the room that get in at 80 cents or $80 a contract, get out at $1.60, 100% gain. But that's what OOMCAT looks like. All right, so we'll talk about that as we move a little bit forward here. All right. All right, so that's Heiken-Ashi candles. All right, anybody got any questions that I can address? Let me know. Okay. Again, we know the color codes here: green, blue, red, yellow. That's all we need for the SPY super system. And I have updated the chart quite a bit. We've optimized it for clarity and precision. I added the 8 exponential, which I showed you. It improves signal confirmation and trade timing for both entries and exits. Makes it much more effective. High volume candles aligning with the SPY super system current momentum indicator for bullish or bearish increases the probability of success and larger profits. This makes a huge deal. It's really, really a huge deal. It comes with the SPY super system. If you get the SPY super system, you'll get your high volume candles, what we call HVC, right? So using SPY super system indicators in conjunction with the high volume candles to find the best entries. And again, this can work for both bullish, for both 5 minutes or intraday trades and swing trades. But I'm going to show it to you mostly on 5 minute. High volume candles are white. High volume candles are yellow. Yellow for bearish, white for bullish. Easy to identify on the chart, right? You can see them right here. Here's the SPY super system again. We looked at this. This is the same thing we looked at just a minute ago. Right, here's your current time frame momentum intraday, and your multi-time frame momentum and current time frame momentum on a daily chart to find those. All right, now before I get into more details on the charts, let's talk about what we're actually looking for here to find these, okay? How are yellow and red candles different? Also, how are green and blue candles different? Yeah, it's all, Rick, it's all about volume. It's all about volume on that candlestick, right? How much volume is there? If it's well above the average, in my case, the way I'm looking for it, the average 50 period moving average of the volume, then they're gonna get changed color. So it gives me a much better indication that if I'm going above, if I'm getting a bullish setup on my SPY super system, in other words, I'm blue or green on my current time frame momentum, and that when it changes to blue or green, I've also got a white candle, which is a high volume candle, high volume bullish candle. That tells me not only the institution's getting in, but they're getting in there with a lot of force, right? So they're really diving in. So that's what I'm identifying. I'm identifying the color, the volume on that candle, and that works for 5 minute. It works for all time frames. You can use it on the daily as well to find. I know that you showed when I showed you tenant healthcare today. You notice that the daily candle is white. It's got very high volume today. A lot of buying going in tenant healthcare. All right, so this is what I look for. If I'm going to take a trade, if it's going to be a swing trade, I always look at the daily chart first. I would recommend that anyway, even if you're going to be an intraday trade, because you want to look at the daily chart to see where your closest resistance and support levels are. Where's the 50-day moving average? Where's the 100-day moving average? Where's the 200-day moving average? All those things are very important. But if I'm going to go long, if I'm going to go a swing trade long, I've got to have the daily chart bullish. I don't want to take a swing trade long if my daily chart's bearish. I'm trading against a trend, right? So that's the first thing I look at. Then I use the 5 minute chart to identify where I want to get into the trade. Right now, if I'm just trading intraday trades like the SPY super system trade or the OOMCATs that we talked about, I'm only going to use the 5 minute chart. I don't care about the daily, other than the fact is how close are my support resistance levels on the daily chart. Am I in danger of running into a resistance level before I can make enough profit on the trade to justify the trade? Then we got to trade with the trend, both the stock and the market, obviously, as best we can. The market can be pretty choppy, but I want to trade with the market. If the market's bullish and I got a stock that's bullish going up and it's got relative strength, then I'm in on it. I like it. Then the SPY super system must align. This is a killer. On a 5-minute chart, you've got to have the SPY super system telling you that the stock is bullish for long and bearish for short. I never go against this. I do it occasionally if I'm thinking if I'm looking at the oscillator and it looks like it's gonna switch right over on the next candle, I might try to front run it a little bit. But typically, you don't want to be going against the SPY super system color codes. Then after I found some stocks, then I look for the ones that's got the best relative strength for a long and best relative weakness for a short. That hones it down pretty well. And then I'm going to look to try to enter near support or near resistance, right? If I'm at the VWAP, then that'll probably take it as it breaks above VWAP. If I'm trading a swing trade and the stock's breaking above, for example, the 50-day moving average, or breaking out of compression, that would be a breakout, and that would be what support resistance would be. Right, so you use it for whatever time frame you happen to be trading on. All right, now I want to talk about the OOMCAT here a little bit. Again, this is a fairly new strategy. November 17th, I started this. And I'm doing it again. Like I said, there's going to be a lot of people coming on board this year that are going to be intraday traders that are going to all of a sudden have the ability to trade stocks, options on stocks that they've never been able to do before on an intraday basis because they had accounts were too small. This is called out of the money catalyst, right? OOM catalyst. This is what this strategy is called. Now, these are the results from November 17th to February 11th when I first started it. These are my results. I can't post these and I can't alert on them. I can call them out in the room. I do call them out. I called out 2 of them today that I'll show you. But this in this period of time was 170 wins and 27 losses, 86.2% win rate, which it's hanging right in there. Profit factor was 5.21. If you don't know what profit factor is, this is huge. A 2.0 profit factor is really good. 3.0 is extraordinary. 5 is really outstanding. So if you had put $500, that's what I calculated it at, just $500 per trade, it would have made about almost 18,000 in those periods, which is what, 2 months and a half, something like that, almost 3 months. And then I just updated this over the weekend. This is from November 17th to February 20th. 236 trades, 204 and 32. We were over here. We were at 170 and 27. 204 and 32, 87% win rate. Profit factor went up to 6.8, but that's really, I don't think I can maintain that much. I think it's going to drop down into 4.5 to 5. But I had a couple of huge wins in here, which I'll show you. So 500 invested in each trade produced 21.7, a little more in this period of time. And this is my results, right? I can't tell you that this is what you would get in the room because all I can do is explain the strategy to you and show you the charts, bring them up, but everybody has to trade themselves on these. On the alerts and the ones that I post in the room, whatever I post and put in the alert, if you follow them, you're going to get the same results as I do because they're keyed like that. But these I'm just pointing out. All right, so that's the OOMCAT service. Now I'm going to show some examples of this out of the money catalyst trade because I'm really pretty proud of this strategy because for me this is a big deal because I never use out of the money puts or calls because if they're a losing strategy, out of the money puts and calls for swing trades, you should never use them out of the money. And for intraday trades, you should never use them out of the money unless you've got some very specific setups. So here's the setups right here. All right, this was on Friday. This was an OOMCAT trade on Oracle, right? And I called this out in the room. I get in for $72 and out for $1.25. Right, this is where I entered the trade right here. You see what's short, right? You see what the institutions are doing here on the 5-minute chart? Selling, 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 selling. All selling right here. Selling across the board. So where do I take it? Right here. It breaks down below the 8. This little arrow that you get here, this is produced by the SPY super system. It tells you that the stock is breaking compression to the downside. Okay, blue to the downside, pink to the upside. So this is where I took the trade. I get out right here. Because with OOMCAT trades, you're out of the money. Once they start to compress or go against you, you got to get out of the trade. So this was 74% profit, 10 contracts, produced $530 profit because it's $53 up from 72 to 125. So that was an OOMCAT trade. There is all the criteria that we used. It really was not hard to see. You pick this up pretty quick. A lot of people were in this one, right? This was like the extraordinary trade of the last couple of weeks. This was an OOMCAT trade. This was on Frog. And this was also on Friday. It was the same day. So we had Oracle, and then we had Frog. So this was the Frog trade. Here it is breaking down here in the afternoon. I don't chase it on a big candle like that. See, we had a big bearish candle, then we had a bullish candle, but it's still moving sideways. Now I get a candle here that's breaking down. Look down here, right? Institutions selling, institutions buying, institutions selling, yellow, breaking down right there below the VWAP. I'm sorry, below the 8 exponential moving average. This is where I took the trade, right? I took it out of the money. It was trading at about 42 bucks. I took a 39 put out of the money by about $3. Paid $30 a contract for it. This is dirt cheap, right? So this I wrote down, and this thing was really moving. Look at the high volume candles stacked, one right after another, one right after another, and this is where I get up. I'm starting to compress. I could have taken more profits, but I had put a sell order in at $200 a contract. I get in at 30. I had sell order in at $200 a contract. Took it off right there. 566% profit. Now, don't think this is normal. You get these, but they're most of the time they're going to run more like 50% to 100%, sometimes 150, sometimes 30%. But typically, this is what you're going to get in these moves. But this was pretty outstanding, and it was a pretty long trade. Not long, but 4, 5, 6, about 45 minutes in this trade. So 10 contracts produced $1,700 for $30 a contract. This is what OOMCAT can do. But again, you've got to understand the strategy. You've got to understand that you don't take these. If these candles were not yellow, right? If these weren't high volume candles, I would have had to take in the money puts. I can't take out of the money puts. I need to take in the money puts. But with a high volume candlestick, I know the institutions are coming in, and I know they're selling hard, which means it's likely to maintain this downward movement, getting closer and closer to my strike price, and also it's going to continue on down, which means that my premiums, even on a $30 premium, is going to shoot up, right? I mean, this went from 30 cents to 60 cents in one candle, right? That was Frog. All right, so I'm going to look at some live charts, and I want to kind of show you some SPY super system indicators and the high volume candlesticks in action. And again, this is a fairly important deal. The combination, this combination identifies not just when institutions are buying or selling a stock, but when they're buying or selling with major volume. This is what we're looking for. This is where you get momentum, and this is where you get your catalyst from. All right, so again, I'm going to show some live charts so we can see the exact setups used for the SPY super system and intraday trades and the OOMCAT intraday trades, right? Again, these are extremely high probability trade setups. They use the SPY super system indicators to tell me the institutions are in, and the high volume candles to tell me they're in with a lot of power, right? And again, this combination identifies not just when institutions are buying or selling, which is important, but when they are buying or selling with major volume, right? And both of these very powerful intraday strategies produce win rates over 85%, as well as profit factors in excess of 4. Very, very high. So let me go to some live charts again. And I'm just gonna go through some randomly here today. All right. Here's BABA today. This is the one I mentioned I took today. This was an OOMCAT trade this morning. Took it right here at about 950. Rode this thing down again. This produced in at 91 cents, out at 144. So about 50%, 40, 50%. Some folks in the room actually caught a little bit more than I did, but that was BABA. All right, so let's take a look at some other ones. I also had open today and an actual long this morning. All right, so here's open. It broke up here. I took it right here about 945. This was a cheap stock, $5.17. So what I did was I took the 550 calls out of the money, 550 calls. It cost me 5 cents. It cost me 5 cents to take a 550 call on this thing, even though it was down here at 512. And I get out right up here. It went up to about 535, I think. Went up a little bit higher than that. Went to about 539. But I got out and got in at 5 cents. And I bought a lot of contracts, obviously, for $5. But 100 contracts was $500. Anyway, I get out at $10. 5 cents to 10 cents, $5 to $10, right there. That's 100% gain. Reading these candles, you see the high volume candles, and you see the institutions in here buying. No reason not to take that. And then you notice it went back to yellow and it compressed. I'm out. I'm not going to stay in the trade when it did that. All right, that was open. That was a pretty nice trade. So let's just look at some other ones. I didn't take a lot more today because the market was pretty crummy actually. Let me see what Microsoft did. Here's Microsoft this morning. This was an interesting one. I actually took Microsoft overnight last night as an out of the money call, and you can see what it did this morning. It popped right up. That produced about I get in $1.13 and I got out at $2.13. So about, I guess, about 80% on that one. But again, what could you take it today? How could you trade it today? Well, you could have taken a short right here on Microsoft right here if you wanted to. High volume candlestick coming down, coming through the VWAP, but you wouldn't probably take it till here after it broke through the VWAP, and then we're just right down. But you're only going to be in it for 2 candles. But again, that's about $1.50. So if you're drawing options on that, you probably make $75, $80 a contract on it, right? On Microsoft. I don't know what else we had out here. Nothing much else. Notice not a lot of high volume candles. If anybody has any stocks they want me to look at for OOMCAT, I'll be happy to do it here. Right there's Apple. Nice short in Apple. Right there. Coming down below the VWAP in the 8, right there with a high volume candle. Take it there, you get out right there. Goes from about 273 down to about 271, couple bucks. So that was a decent one as well. And NVIDIA had huge earnings last night, tremendous earnings last night. And here it is today. So could you trade this short today? You certainly could, because as it comes down below these VWAP right here, right, this is a perfect entry for a short, because you got your VWAP here. As long as it stays below the VWAP, you stay in. So notice you got some high volume candles. Then you got a high volume bullish candle. All that means is it hasn't broken below this previous low, but it's still high volume. So you could take it right now. I didn't trade this, but you could have stayed right in this thing from about 191, and you would get out right down here as a switch back again to about 185. That's a $6 drop in NVIDIA. Those premiums on the options would have skyrocketed if you took it out of the money one on that one. Patrick, you want to see FSLR? Sure. Again, these are intraday trades now we're talking about. All right, swing trades are a different story. But here's First Solar. Right, so comes down pretty hard this morning right in the open, big gap down. I don't chase these when they happen this quickly. I wait to see. Then I'd be waiting. Now, what I would do with First Solar, if I was trading First Solar and I wanted to short it, see how it broke below the VWAP in the 8 right here. And this is also a pivot point, but it broke below here with a candlestick. Now we're looking here at. Let's take a look. We're still looking at Heiken-Ashi, I think. Yeah, let's go over. Let's switch to a regular candle just so we can see that. All right, so here's your breakdown right here in First Solar. But because the candlesticks are not high volume, notice they're not white or yellow, right? They're red. I would just take it in the money put on this thing. That way you can just kind of ride it down. You don't have to worry too much about getting a rapid drop. You just grind down with this thing. And then when it pops back up here to the 8, then you get out of the trade right here. Notice it went to blue. So you could ride that down on First Solar. That would have been a good short, but you would not have used OOMCAT on this. You would have used just a standard SPY super system in the money put. Okay. Anybody else got anything they want to look at? You're going to be looking at Oxy today. Oxy oil was all over the place today. We go back and look at oil, which is very news sensitive. Right. So here's Oxy this morning. This is 10 o'clock. Here we go to right here. We go from selling to buying right here as the stock breaks up above the 8 and the 15. And so you can take it right here long, right? And you see the volume, right? So you can take an out of the money call on this thing and ride this up. Now this is a pivot point, but as soon as it rides up, as soon as you get a yellow candle like this, which is compressing and heading down, you take profits. But that would have been a beautiful oxy trade, right? And it actually kept on going from there. And then this afternoon, we had it reverse back down the other way, but this is too much chop here. You notice we're still above the VWAP. You can't really trade that like that. Will this work on futures? Yeah, it worked beautifully on futures, Patrick. What's that, RTX for swing, Andrew? A swing RTX, okay. So if we're gonna look at RTX for a swing, we gotta switch over to daily charts, right? So we wanna look at the daily charts on this, right? So we're gonna look at Raytheon for a swing trade. And here's where Raytheon daily chart looks like here. Now, I don't know which direction you're thinking about taking this, but this is a bearish setup on Raytheon, but this is a horrible looking chart. I mean, really, it's just not a great chart. If I take a look at my TC2000 chart with it, you see what I see? It came down at that white line, that red line is the 50-day moving average. So I wouldn't be shorting this, and I wouldn't go long here either. We don't have any institutional buying on RTX. Okay, will it work on futures, Patrick? It will. I mean, if I go in here and I put the ES on here. Okay, here's the ES today. Messy day. Whoops, that's daily. Let me switch back to the 5 minutes, sorry. All right, so here's the ES today. Let me get to the end of the day. Okay, so here's the ES. Any great opportunities here? Not a lot of high volume opportunities. It was a little high volume opportunity right here for a quick long, but it was below the VWAP. And again, the futures were down pretty hard today. And, so this one I would have been trading with probably in the monies. And I don't really see anything here that's too exciting. This is still going on here right now. So, all right, and SUZ, Alan, you're talking about 5 minute, Alan? SUZ, 5 minute or daily? Daily, okay, daily chart. Okay, is SUZ daily right here? All right, so we've got a bullish setup here on this. I don't know anything about this stock, and I don't know what the volume looks like. Yeah, volume's pretty good. That's a nice long setup right there on this trade. Again, you can see you've got buying across the board, and you got high volume. This shows high volume yellow, but that's just because it didn't break out above here. Anything above 1154 on this is really an excellent entry for a long. For SUZ, I'm actually going to make a note of that. That's actually pretty nice. Okay, so that's how we use these on daily and how we use them on 5 minute. Again, OOMCAT trade is on 5 minute. STI Super System trades are on 5 minute. The other ones are just regular swing trades. But here's your volume if you look on how this closed today on the 5 minute. See, it closed with a big high volume candle. You don't have to worry about this because you're looking at the daily chart, which is all green. All right, SUZ. You're welcome, Anthony, Alan. Thank you very much. Okay, I got to get on with the rest of the presentation because I know it's been a long day, and I'm going to go ahead and move ahead here. Okay, so again, these are some charts, and we've been looking at live charts. These are some that I put out here. This was a SPY Super System trade right here. This was before I had the high volume candles, but just to identify how you can get into a trade based on the SPY Super System indicator, telling you this is bearish, institutions are selling, and it's breaking down below the VWAP and the 8 right there. Perfect entry for a short on the SPY right there. Right, another SPY trade to the long side. Notice it's selling, buying, see the blue coming above the VWAP right there. Buy it right there and ride it back up. And this is somebody who doesn't have a system that they can follow. They aren't able to maintain discipline. They chase the stock up and then it turned around and went against them. And this is what they're doing. If you're trading like that with emotion, whatever emotion it is, you're going to have a heck of a time trying to be consistently profitable. You really want to trade like this with a known methodology and strategy that works and stick to it. It's really, really important. Okay. So again, I'm just a couple of things to go through here. When I'm saying process precedes results, all I'm saying here is please learn the strategy and how it works. Learn that first before you worry about your P&L. If you focus on your P&L, you're looking at the wrong thing. You can take a bad trade that makes money for you. You can take a good trade that loses money for you. It doesn't tell you whether it was a good trade or a bad trade. This is what tells you whether it's a good trade or a bad trade. And that was the funnel we looked at. Okay, and just briefly about the alert service. These are for day traders, day trades and short-term swing trades. These are not for, it's not an investment service. This is for stocks that are fairly quick, but most of them, if you want to, you can hold them overnight, because I don't put out alerts on anything except trades that matched up to the daily chart. Right? Designed for traders who can't watch the market all day. Real-time alerts on the highest probability trade setups. What does that mean? It means the institutions are in it, right? And we've got market internals that are also aligned with the trade, right? And then I do some fairly deep technical analysis on these stocks to take the best ones. My equity curve for last year, this is based on $2,000 per trade. This is just something so I can show the results that we've been getting in the room. Okay, so I'm going to show some results here. I'm going to run through these fairly quickly because I know this has been it's been a long presentation, but I do want you to see exactly what we're producing here in the room. In 2023, 2,000 per trade produced a little over 60,000. 2024 produced a little about 55,000. And keep in mind that the profitability on the trades is a lot of it's based on what kind of a market you got. Choppy markets are much more difficult to produce big profits. You still can be very consistently profitable, but it's hard to get big numbers when the market's just chopping all over the place. 2025, 55,113, about 4,400, still pretty good. And again, this is a lot of money for most people. If you can make $4,000 to $5,000 a month trading like this with 2,000 per trade, that should make a difference to most people as far as their disposable income is concerned. All right, this is just something I'm probably going to take this off after this. This is when they put the tariffs on last March and April, and then took them off. The stocks went crazy. We only had 4 trades on. These were all short. We had these in the room. We also had alerts on these. They were in the alert service. Broadcom, AVGO, we get in for 75, we get out for $1.04, $104, $75. We made 39%. Nike was a massive one. We get in for 285. They put the tariffs on. Nike dropped. It just fell apart, collapsed. We get out for $9 a contract, 216% profit in a few days, about 3 days. We were also in Sarepta short, and we were in NNE short. And all of these produced beautiful profits. Well, the market was down 10% in 2 days. Right now, we were short on all these, so we were taking pretty good advantage of that. All right, so this was just this past month. I haven't updated to February yet. January, we only had 15 trades, and we're in a lot of trades. We had a couple of losses in there. 2,000 in each trade produced 2,145, which is pretty low, but it's still a pretty decent profit. And there wasn't a lot of trades, and the market was horrible. I mean, it's still pretty horrible. This was January, February, March, and April of last year. I'm just going to run through these just so you can see. One thing I do want you to see is the percentage gain that we get in the trades that we take. On the trades that we take are swing trades. This is the kind of percentage you're going to see. This is not indicative of the SPY super system or the OOMCATs. OOMCATs and SPY super system produce much higher results than this, but they're very quick and you have to manage them yourself. But these are the trades that I posted in the room and sent alerts out on. So these are if you followed me, follow the trades, these are the percentage gains you would have made. And you can see they run 10, 15, 24, 30, 40, 50%. That's fairly normal for these kind of trades. All right, this February, March, and April, January, February, March, and April of 2025. A little more water. See the win rates, 84, 89, 83, 81. Try to be very consistent here. So 3,100, 3,800, 7,800, 4,900. Just depends on what the market was like. April was a pretty big month. May, 88% win rate, 4,900. That was the alerted trades. Trading room was about 5,700. These had some time spreads in them. But again, I want you to see the reason I show these is to show you the percentages. This was June of 2025. I was on vacation last year for a couple of weeks. 10 wins, 1 loss. I traded only when I was here. 91% win rate, 3,790 bucks. Not bad for that fewer trades. July, this was a crazy month. We had a lot of trades last July. The market was pretty nice, a fairly nice trend in it. You can see the percentage gains. Obviously, you can see losses. I want everyone to be aware that we take losses sometimes. Again, pretty big percentage gains here. All of this being driven by the SPY super system, by the way. None of this I could do without knowing what the institutions were doing. So again, you can see the percentages in here. Pretty nice win here in the SPY. That's a Sarepta 166%. So July, 30 wins, 3 losses. That's a lot of trades, 33 trades. 91% win rate, 16,829. This was like 4 months in one. This is not common. This is not common. I've had 2 or 3 months like this, but it's not common. Not for $2,000 a trade. I mean, if you're putting 4,000 or 5,000 into a trade, it's going to make a big difference. But this was based on 2,000 per trade. August, 20 and 4, 84% win rate. September, I just kind of listed them in here so you can see them. 21 and 4, 84% win rate. October through December of 2025, 45 wins, 9 losses, 83% win rate. 2,000 invested in each trade, produced just 47.48. This was a very weak time the end of this year. Again, the market has been very brutal, but still, we've been profitable every single month. So that says a lot for the ability. We just have to cut back on trades a lot of times, the number of trades we take. This was I've had one losing month in the last 3 years. This was in September 2024, because people always say, do you win every month? Well, I had a losing month. This is 2024, we're going back, but here's the losing month I had. 8 wins and 5 losses. All right, I mean, it was pretty embarrassing. I felt as though I should be wearing like some sort of a bag over my head, because this is, I don't know that I've ever come in that low at 62% win rate. Lost 1786 in the room, 295 on the alerts. Not a big deal, I know, but we do have losing months every now and then, so you have to understand that. But you can see that we bounced back and had some big wins after that. Okay. What do the alerts look like? So if you want to get the alert service, you're going to get an alert. The first one's going to have the date. It's going to have the particular symbol, Nike. It's going to say buy, for example, April 11th, 67 puts. Okay, that is April 11th is your expiration date. 67 puts is your strike price. 285 is what you pay for it. Then you would get another alert that says this, and it's going to say sell order for $9. That would be set up telling you to put an order in to sell it for $9. And then once it's closed, you'll get them would say it was sold for $9. Now there could be some other alerts in here if I adjusted it. Let's say I went back down to 850 or I went up to 950. You get an alert for that, right? So that's what the alert service looks like. And again, how do we achieve these stunning results? I think I've made this pretty clear. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish and bearish. All right. All right, and again, what's the SPY super system look at? It's looking at triple screen assessment, which is multiple time frame. It's looking at momentum across 3 time frames. It's looking at trend. It also looks at money flow. And now I've added the volume in there for the candlesticks. That's a big deal. This high volume candlesticks is a very big deal for identifying the strength of a particular move. All right, so I'm not going to go through each one of these again. If you do take the SPY super system, if you buy it, you'll get this template, which will have all of this on here. You'll also get another template if you just want to trade day trades, intraday trades. You just get the current time frame momentum. You don't need these other 2. You just get this, but you get all of the other information up here. Okay. And again, just a couple of examples. This is the Heiken-Ashi reversal on the triple Qs right here. Took it right here. I don't even know how long we stayed in this trade, but you notice there's the 15 EMA right there. It's coming down just before I even had the 8 on, and that was a good trade. The SPY super system I just run through quickly. This is trading indexes, SPY Qs, IWM. Now you can use this for stocks as well, as I said. I call it something different, but this is what this produced when I started this, and I started this in 2024. Again, I'm not going to go through this every single one, but you can see the number of trades you take are fairly high. The numbers are much higher than they are in the room, but like in August, 56, 6, and 2. But these are very quick trades. You're only 1 trade at a time. these are the results that I produced. Again, these are too quick for me to post and I can't alert on them. But this is something you can do because I have a very detailed strategy video on how to do this. I have a lot of people in the room that this is how they trade all day. They don't do anything else. They like to trade intraday. But again, you'll only have one trade on at a time, so you can follow it. And so these are just more results. Again, I've never had a losing month with this. I've never had a losing month with the OOMCATs, and the numbers are pretty big on these trades, but it's a lot of trades. All right, so here's the SPY super system. We talked about this before. Just again, just so you can see clearly, here's selling right here, here's buying right here. As soon as it went from selling to buying, and you get a pop out of the box symbol coming above the VWAP, there's your entry for a nice little move up of the SPY super system. There was $220 profit per contract on the SPY. All right, and I'm not going to go through too many of these because there's a lot of them. These are trades that I put in here just for other webinars before. But I think going to the live charts is also very, very helpful. This is $90 per profit on the SPY. He had 2 candles in and out. This is the modified format for the SPY super system for intraday trades. Okay. All right. So I'm not going to keep going through here. I'm going to look at some other ones. This was a trade that I put on recently as a swing trade for a line. I get in here. Notice selling, buying, selling right here, right? Green to yellow. Buying, take it here as a break, get a pop out of the box. I take it here. I set it up as a swing trade, and I sent an alert out on it, but I took it off after an hour for 51% profit. And it worked overnight as well. But I wasn't going to give up 51% on that quick move like that. This was before I had the OOMCAT, which this might have been actually an OOMCAT trade if I had colored candles up there. All right, there's URGN. This was a daily trade here. Right here, compression, popping off the 15, institutions buying. Right, NVIDIA, took it here, get out here, fairly quick trade, 32%. So I just try to get you familiar with the setups. Here's a Nike trade that we made 216% on. This is where we took it. Notice institutions are just selling the crap out of this thing. And it moved sideways and then a big gap down. We took it off as soon as it gapped down. One of the rules I have that I follow is gaps are gifts. If you're long a stock and it gaps up in the morning, take the profits. If you're short a stock and it gaps down in the morning, take the profits. If you're in your puts, for example, on the calls for a long, because the most unlikely thing to happen is when a stock gaps up is for it to keep going. What they call a gap and go. Usually they do a gap and chop or a gap and crop where they move up and pull down. And it's important to understand something. When a stock gaps up in the morning and your options, you get call options on a gap up or put options on a gap down. Besides getting the price action that you get, in other words, the stock moved up in price very, very fast. So you've got all that profit in the premiums based on the stock movement. You're also getting implied volatility increase. Because the stock gapped up, the implied volatility in the options is going to be raised by the market makers. You're going to get more than you would have got if they didn't get that gap. In other words, let's say you had a stock that gapped up to $50. All right, at 9:31 you get out and you take a 50% profit on it. If you stayed in this trade and at 9:40 the stock's still at the same price, you wouldn't be getting anywhere near as much money because the implied volatility would be coming out of those premiums. That's why gaps are gifts. Take advantage of them. Okay, the Sarepta, HIMS, another long here you can see, and I think I've gone over most of these things. So they're the charts. And again, I don't want to take a lot of your time up, and then I already have. And I appreciate everybody sticking through this because I try to be very clear and I try to show examples with live charts so you can see how unbelievably impressive this software is. So here's our swing strategies. We went through that. Here's our intraday strategies, SPY Super System, OOMCAT, just a tremendous strategy, both of these. This thing, if you can find these, I showed you some of those, but please don't just take them willy-nilly. If you don't have the high volume candles and the momentum, please don't take them. If you do take them, use the in the money calls and in the money puts. Okay, so here's your offers that we have that Rory put out here. You can do a quarterly membership. You get a 2-week trial for free. It gets you text alerts. It gets you in my trading room for 2 weeks. You get see all the videos I've done. There's about 31 of them out there now. And there's also a private Discord chat room with 2 other professional traders. How far out of the money to get the low premiums? That's a good question. I'm glad you asked that, Conrad. I probably should have mentioned it. How far you go out of the money is very dependent on how volatile a stock is, right? Like I showed you that the trade on Frog. I was 2 strikes out of the money. I took a 39. It was trading in about 41. And today, when I traded Baba, I think I went 3 strikes out of the money, right? If you're trading Tesla, sometimes you can go 6 strikes out of the money because it's very, very volatile. But you want to take a strike price where you feel like if the stock continues with that momentum, it'll get to that strike or pretty close to it. Now, if you're trading something like Visa or Verizon, General Mills, Procter & Gamble, Bristol Myers, some of the low volatility stocks, you probably don't want to go more than 1 strike out of the money, maybe 2. That's the max on something like that because it's going to be too far out. And you'll be able to tell by looking at the price. But that's what I would say. And you also want to look at the volume on the options. If you want to have something that's got some decent volume in it, so you can get in and out quickly enough. Good, very good question, Conrad. I appreciate that. All right, so there is the text alerts in the room. $396 per quarter after your 2-week free trial. You know, I don't know that 2 weeks is really enough to really, especially in this market, to do any kind of a good analysis of it. But they offer that. Or you can get the annual membership, which is you get the alert service, the trading room. Obviously, the same thing as over here. You get my training videos in the Discord chat. $12.96 for a year, right? For both the trade alerts and the trading room. Best deal, one-time payment. This is you get it forever. $23.96. Trade alerts, trading room, the master classes, which are basically videos that I've done. I try to keep them around 30 minutes, but I've got about 30 of them out there on all the strategies, all the indicators, how to use them, something on the OOMCAT trade, something on the SPY super system trade, something on doing credit spreads, debit spreads, all those things. $23.96, right? So that's for the room and the text alerts, right? If you're interested in the software, and this to me is such a good deal, because listen, I bought this before I started this room with Rightline. I bought the software myself. I came across it, and I found it increased my profitability by a significant amount of money, percentage winning wise. So that's how I got hooked up with Rightline. But for the annual membership for the SPY Super System, again, you get the SPY Super System, you buy the software, you get a month in the trading room. Obviously, you get the scanner, it comes with it, the scanners come with it. You get the master classes or the training videos, and you get them into Rightline will install it for you. The thing goes on Thinkorswim or Ninja. If you put it on Thinkorswim, you don't have to trade on Thinkorswim. And Thinkorswim, you can just download, and Rightline will take over your machine if you want and put it on. If you think you can do it yourself, you can do it yourself. But if you don't feel uncomfortable with that, they'll go ahead and load it up for you, and it'll look exactly like mine, exactly like mine. Okay. Now, one-time payment on the SPY Super System here. This is probably an unbelievable deal. $500 more, you get it. You don't have to re-up every year. You just buy it once, you own it. Remember, if you understand how to use the SPY Super System, and you've got the indicators here, and you get any kind of new updates that we do, if you're not in the room but you're a trader, you now have the same information that I've got and everybody in the room has got to trade OOMCAT trades and SPY Super System trades, as well as swing trades. And you'll have this forever. You can trade off of it. So if you want to become an independent trader and do it yourself, this will give you the tools you need to do it. All right, you'll have the scanners, you'll have all of the indicators. Really, really a good deal for this thing for $19.98. But anyway, your code here is SAVE500 if you want to get the annual, SAVE1000 if you want to get the one-time payment. And same thing up here, you can go in and do that. Now, if you go in the chat box, there'll be links. Rory will put in links to all of those. All right. So something, if you want to take advantage of this, and again, it's sometimes education is really, really important. And I do a lot of educating in the room. Again, I'm in the room all day long, so I'm answering questions. If you come in as a trial, just look, you'll be in there. Just give me any kind of questions you want. I'll be happy to answer them for you during the day. We keep the charts up all day long, so you can see the SPY Super System running in there all day long. And I'll be flipping from one chart to another as people look to take trades. I'm explaining why I like a trade and why I don't like a trade. People ask me about how about this one, how about that one, just like some of the folks did here. All right, so that's what we do. All right, so there is your offers. Again, they're in the chat box. If you have any questions, give Rory a call. Oh, by the way, this is something I ran on. I actually used AI to come up with this return on subscription investment. This is what what the annual subscriptions have produced each year. I'm saying $1,600 as the max. That would be if you did it quarterly. It's obviously cheaper than that if you did it yearly, or it's even cheaper if you do it lifetime. But at average trade size 2,000 assumes all trades taken, 40x ROI. It's getting 40 times what your subscription cost is every single year. That's basically, it's exceeded 40% each year. And again, it's high return on investment and proven results. But again, past performance is not indicative of future results. Trading involves risk, as we all know. Okay, so those are your offers. Again, you can call Rory, 786-732-4656. He'll answer any questions you might have on payments or subscriptions, etc. I appreciate you being here. Thanks so much for spending so much time here today. I appreciate that. And I hope everybody has a great end of the week here and a great weekend. Enjoy trading, and we'll see everybody in the room on Monday or perhaps tomorrow. All right, have a good evening.
David, thank you for another outstanding presentation. Tracking who is driving the move, not just price, is a huge distinction between retail and professional trading. Thank you for sharing that framework and for making such a generous offer for our audience today.